Paying yourself, that is something that catches a lot of women in business out. It seems obvious, right? You make some sales, you keep some money. Simple. Not so much. I know a lot of you are wondering, how the heck do I pay myself? This isn't just a question of making sales, it's so much more than that. It's the details of how that process works. So when can or should you start paying yourself? And how do you figure out that magical sales figure that will make it possible to pay yourself? And what's the deal with taxes, right? So first question, when should you start paying yourself? Well, as soon as you can is the best answer to that question. Being in business can be tough. Without the financial reward, why bother? You want to put yourself in a position as soon as you can to be able to transfer a fixed amount each week, fortnight, or month. Having a regular pay hit your bank account each week is important for your own self-worth and can help prove your business's worth to your other half. Once you start the regular habit of paying yourself, even if it's a small amount each week, it's so much easier then to focus on increasing that pay amount. You as the business owner really do need to value yourself in business, and part of doing that is reaping a financial reward. Now, who cares if you start with $30 a week? You don't need to tell anybody. It's the habit that's important. Growing the number then becomes that much easier. Do you need a business bank account? Yes, 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 and yes. Even if you don't sign up for an actual business bank account as opposed to a personal account, you need a separate account that is just for your business income and expenses. This goes for PayPal too. If you receive funds from PayPal, then you use that account to pay for your shopping habit. You're creating a headache for yourself. I'll explain more about that in a little bit. If you don't have a separate bank account, take your fine self down to the bank. Toot sweet. If you have internet banking, with most banks, you can set up a new bank account without even putting pants on and leaving the house. It couldn't be easier. Now, a small disclaimer, if you trade as a trust company or partnership, you must have a business bank account for tax purposes in Australia. So make sure you check the legal requirements in your country for the type of business setup you have. So how do you actually take the money? This is the piece that can be more confusing than just about anything else. Who do you tell? How do you keep track? Can you just dip on into the account and help yourself? The answer is yes, you can. For micro to small businesses where you're just trading by yourself, maybe you're in a partnership or you have a company where it's yourself as a director, where you don't have any investors or anyone else to answer to, then yes, you can dip on in whenever you like. If you've got a business partner, obviously this should be by mutual agreement to avoid them wanting to shank you next to the water cooler when they discover that you have emptied all the money out of the business bank account. If you're a sole trader, and that means you don't have a company or a partnership, then the mechanism is quite simple. Just transfer the money from your bank account, your business bank account, to your personal account. It's good practice to track that transaction so you know how much you're paying yourself. This is why I prefer women in business to establish regular set pay amounts, amongst other reasons. Otherwise, you're dipping in and out and it's going to get really messy. It's incredibly messy when you randomly pay for groceries or fuel or that odd bill from your business earnings. You and your accountant are then going to need to go through bank statements. You're going to need to highlight what's personal, and you're not going to remember by the time you get around to doing your taxes. It ends up being a task on your to-do list that gets done at the very last minute, and it's just ugly. If you're a company, the mechanism is similar. You just move the money from your business account over to your personal account. The difference is how you record that transaction, or more specifically, what that transaction is called. Now, I don't want to dive too deep into tax minimization here. It will bore most people, and it's a question for your accountant because I'm not an expert. But to give you some very, very general information, once you are paying yourself over a certain amount per year, usually in excess of $100,000, there may be some tax savings by having a more complicated structure like a company. In Australia, we call those private limited companies, abbreviated to PTY Ltd. In the US, you have have limited liability companies or LLCs. The UK has limited companies or LTDs, and so on. If you do trade via a company at the end of the financial year, your accountant will go in and change anything you have misallocated anyway, especially if that misallocation is going to cost you more in tax. That is why you pay them the big bucks. The important thing is you or your bookkeeper keep clear records so your accountant can find the information that they need quickly and easily, and so you know how much you have paid yourself. Your accountant can walk you through the cost versus the tax savings of having a company structure. The more complicated your structure, the more you will pay in maintenance costs per year. More complicated structures also come with more rules and regulations, but if you're ready for that step, then a good accountant will support you to meet your obligations. There are also other reasons to trade as a company, like protecting assets if you're in a high-risk industry. Once again, speak to your accountant if you're unsure. For sole traders and partnerships, you simply transfer the money from your business bank account to your personal account, and then you either record the transaction in your bookkeeping program or software or a spreadsheet. I use Xero, which automatically tracks the transaction, so my bookkeeper knows where the money has gone. Is there a formula for the amount that you are able to take out as pay, like a fixed percentage? I wish it was that easy. There is no fixed percentage that will work for every business. I saw a business coach blogging on this topic, and she was advising that you take 30% to run your business, 30% back into stock, and 30% to pay yourself. Aside from the fact that those numbers don't actually add up, it isn't a good approach anyway. There are some industries where a version of that rule can apply, like restaurants, but there is no rule that applies to all businesses. You may need more than 30% to cover business expenses or cost of goods. If you've got a business like mine, which is largely online and has no stock, you'll be able to pay yourself a lot more than 30%. I take closer to 70%. So now I know what you want from me is a very specific answer to figure out how much to pay yourself. And I wish I could easily say, apply this formula and you will always have enough for your bills and to pay yourself. But unfortunately, that isn't how it works. What I can share is the Profit Lovers approach to paying yourself. It is not to wait until there is an excess of money sitting in your bank account, because that's the crumbs. Profit Lovers aren't begging for crumbs. The Profit Lovers approach is to choose a number as a monthly pay goal. Write that number down, then add your monthly business expenses and cost of sales to that number. If you don't know your business expenses or your cost of goods or cost of sales, then it is time to sharpen up your business financial knowledge. Once you have your goal amount added to your monthly expenses and cost of sales, you can use that number to calculate how many customers, clients, or sales you need each month to reach your goal, cover your bills, cover your expenses, cover your cost of goods. If you need more help because these numbers are completely foreign to you, or you have a vague idea but you can't quite pull them all together, then stick with me until the end because I've got something for you. Now, how do you know when you can take money so you don't run out the next month? It's one thing to figure out how much you want to pay yourself, but then you need to figure out when you can pay yourself. So how do you know if you're going to have enough cookies in the tin left to pay next month's business expenses? What if you don't make any sales next week or next month? If you hate numbers, then you are going to loathe this answer. Your cash flow forecast will tell you when you can pay yourself comfortably. A simple cash flow that lists the money you expect to come in sales based on history and the money you expect to go out in expenses based again on history. You will soon see what is left over for you to pay yourself. You can add in a regular payment to your cash flow tracker if you have the Profit Lovers plan and track, so you can see what next month is likely to look like. Expect it's going to take a few months of practice to get this right, but if you stick to it, you will find it easier and easier every month. In Members Club, we break down all of this stuff into step-by-step lessons that are usually no longer than 25 minutes, and each lesson comes with support materials like spreadsheets to guide you along the way. Plus, there is a private members group, so if you're lost, I will answer your questions as best I can. And in Members Club, we create a simple cash flow plan and a pay me plan so you can start paying yourself. Now, if all of this sounds like a horrible way to spend your time, then you're missing part of the excitement of being self-employed. You're missing this golden opportunity to use these numbers to shape your business into a healthy money-making venture. These numbers could put you and your family on an entirely different path in life. They could provide you with the revenue to travel, invest in music lessons or sport lessons, increase insurance coverage, plan for your retirement, grow your assets, buy an investment property, be more charitable, take care of your parents. The list goes on. Our earning potential is only limited by us, and with the right plans in place that aren't complicated or nearly as scary as you think, you can take advantage of that business potential. You have so much power to influence your sales and income if you take the time to figure out your goals first, and then you create a plan to reach those goals. If you'd like to get started with this process of paying yourself regularly and for it to be a really planned and comfortable process, then make sure you download the Profit Lovers Pay Checklist. If you're watching this video on theprofitlovers.com, the pay checklist should be listed straight down below this video. If you're watching this anywhere else, I will link it over in the comments or in the note section below, or you can head on over to theprofitlovers.com/pay to download that checklist. So go on over, download that checklist, and get ready to start paying yourself.